Good morning. Happy Monday. It's Brett here with Directors. Hey, wanted to reach out today and talk about debts. So I find a lot of times we have clients that somewhat disqualify themselves, which is too bad. Maybe they heard from a friend or a family member, or they were Googling something, which can always be scary. And they're nervous to reach out to me as a lender, for fear of denial potentially or not being approved for what they want, or even you guys as agents to say, hey, I just don't think there's a chance. So one of the big factors I see around that is debt. So what I mean by that is, oh, I have a lot of student loans. There's just no way I could qualify. Or, hey, I have a car loan that I co-signed on for my son or for somebody else, so I couldn't qualify. So a few things I wanted to do, reminders that we can kind of pass along to our clients in those early stages is we have multiple ways to look at it. So student loans, it doesn't necessarily matter the size of it. It's going to come down to the payment. Well, for a lot of payments, they're maybe deferred. But we still have to look at some time of a future payment, but there's cool payments that are income-based repayments. So I've seen clients with pretty significant amount of student loans, but that income-based repayment is very, very realistic, and we get to use that for qualifying. So that's one example. Other ones are I've had clients where they're close to paying off a debt, whether it's a car loan or some other kind of fixed installment loan. Well, once we're around, at 9 or 10 months left, even though there's still a payment at the moment, we call that a short-term debt. Many programs will let us omit that. So say they have a $500 car payment, but only 6 payments left, we don't have to count that against them. So that can be huge. The other thing I see a lot of times is authorized user accounts. So, hey, they're on someone else's credit card. Very easy for us to take them off of that or to omit that debt. And then lastly, co-sign debt. We see a lot of folks that maybe co-sign for family members on houses, cars, other things. If they're not actually paying it and the co-signed member is, we can document that. So my point is there's a lot of different ways, especially on debt, which is a huge factor of how we qualify mortgages, that we don't always have to count things or they're not nearly as significant as clients may think. So if you're talking to your clients, encourage them around that or just in general, hey guys, there's no harm to get pre-approved, to have the numbers run, and no matter what, it'll put a great plan together. So I hope everyone has an awesome Monday here, a great rest of the week. And as always, anything we can help with, feel free to reach out. Thank you. Bye.